Welcome to another episode of Bulls, Bears, and Blockchain on Revolution Radio, making smarter financial decisions with your host, Rob Nelson, former Fox News host and anchor at Roundtable Media with his team of market masters, Marc LoPresti, Managing Director of Moneta Advisory Partners, co-founder of Battlefin, leading data platform, and a former institutional equities trader at Lehman Brothers, Alex Mascioli, founder of Trade the Chain, former head of institutional prime brokerage at Bquant, John Najarian, co-founder of Market Rebellion, former co-host of Halftime Report on CNBC, and co-founder of Option Monster and Trade Monster. Daily data insights and ticker updates direct from three of the world's top TradFi, legal, and crypto experts on Bulls, Bears, and Blockchain every Monday and Friday on all your favorite platforms. Let's get started.
Good morning, good afternoon, and good evening, depending on where you are, what part of the world you're in, and where you're listening to. It is Revolution Radio's Bulls, Bears, and Blockchain. I'm your host, Rob Nelson, with my team of market masters, Alex Mascioli, Marc LoPresti, and John Najarian. You guys are an amazing team, and our audience listens and tunes in because they want to know what the smart moves are to make. They want the best insight, the best info in the shortest amount of time. So let's jump right in. Good morning, good afternoon to you, Marc LoPresti. Give me your top three stock picks.
Well, thank you as always for having me, Rob. This week we are focused on earnings, particularly in the tech sector. We're expecting Microsoft to report along with Tesla and then Boeing. So those are the three stocks that we're looking at. We are overall bullish on all three. We're looking at Tesla, notwithstanding having some issues in Q4 and throughout 2022, whether it be supply chain, some demand-related headwinds. We're still looking for Tesla to report year-over-year growth of around 40%. And earnings, we're expecting to come in at about $1.13 a share, up from 85 cents a share in the previous Q4 of the prior year. That's all notwithstanding the fact that the company missed its overall targets for 2022 due, as I said, to some of those supply chain and demand issues, as well as gross margins on cars in general trending lower. But look, the stock suffered a massive sell-off, as you and all smart money traders know, down 25% just over the last month and 67%, my God, over the past 12 months. The stock trading at Friday's close at around $133 a share. The average price target for this stock, Rob, is over 200, around $217 a share, which is almost 70% higher than the stock's current price. We got back into this thing, as we discussed in the last show, at about $110 a share. We're happy, obviously, in the mid 130s. We'll be even happier at 150 or 170. So even if Tesla misses and the street beats it up, we might look to add to that position. Moving on from Tesla to Microsoft, Microsoft kicking off the tech group's earnings on Tuesday. Lots of analysts following this stock have been revising their earnest estimates lower, slashing earnings estimates in some instances. Like most tech names, this stock has been just beaten by the street, down 22% over the last 12 months. Of course, on the heels of the large-scale layoffs, Microsoft recently announced over 10,000 of its employees being let go here in the first couple of months in 2023. Microsoft not being alone, by the way, Rob, in our humble opinion, of getting ahead of itself during the Great Resignation and overhiring, as we've seen rampant throughout the tech space. We do think, however, that Microsoft is going to beat earnings. We're going to think it's going to beat the consensus expectations, which are around $318 a share, which is where, that's where our forecast is. We think we're going to see around an 11% year-over-year growth in terms of overall productivity and revenue. And as we discussed on our last show, Bulls, Bears, and Blockchain, there is Microsoft's significant investment in ChatGPT, which could really, really be a game changer. As we mentioned, or as we discussed before the show with some of our insiders here, some folks are estimating that at 1 million users, based on the initial premium subscription level for the ChatGPT service, it could be resulting in at least $1 billion in revenue pretty quickly.
We're going to talk about ChatGPT a little bit later in the show. So put a button in that for a second, because I think that's an interesting conversation. Bottom line for you, though, is even with if ChatGPT doesn't pan out the way people expect, you're looking at Microsoft as kind of ridden out this tech decline, if you will, with everybody laying off and sort of, entrenching a little bit and in good position to grow.
Yeah, well, yes, and we think the stock is looking cheap, right? I mean, the current stock price is around $236 a share. We think the implied valuation, based on the data that we look at, is around $318 a share. Most the analysts seem to agree that the stock has been beat up pretty good. So unless we see a significant miss out of Microsoft, we expect that this stock will react positively when it reports earnings on Tuesday.
Awesome.
Last one is Boeing. Boeing is reporting also on Wednesday their Q4 numbers. We are expecting revenue to come in at just under $20.5 billion, which is a 37% year-over-year increase on EBITDA of about $1.38 billion, which is almost 100% year-over-year growth on earnings per share of just under a quarter. Boeing enjoying what was a bit of a surprise to us, at least, the continued significant bullishness from the airline industry and greater demand for new passenger aircraft, as well as continued demand in the cargo space for Boeing with its 777ER that has a waiting list twice around the corner.
All right, Microsoft, Tesla, and Boeing. Alex, take us into the cryptoverse. What are your 3 picks you got?
Absolutely. First, I just want to say I enjoy listening to the Tesla and Microsoft commentary analysis from Mr. LoPresti. He sure knows his stuff around there. So it gets me all excited. Thank you for that, Mark. We have total market cap of crypto standing tall at just over $1 trillion, which seems to be the magic number that makes people either happy or, if it falls below, sad. Daily sentiment neutral. Bitcoin sitting around 22,600 with 52 billion traded in the last 24 hours. Got 3 standouts, Rob. Different from last week, from a continuation. As everybody knows, we've had a bull run going for the last week. There have been a lot of profit takers in the sector, and it does appear, particularly with BTC pricing, that the Genesis bankruptcy filing has been baked into this whole mess. Axie Infinity, ticker AXS, up 20% in the 24-hour period, 57% in 30 days. Sentiment is fading now towards, it's not negative, but it's tapering down, 68 over 100. Trading volume up 674%, and tweet volume 135%. Axie Infinity going on the pump with the whole metaverse and gaming clan. Hedera Hashgraph, ticker HBAR. It's down 6% for the 24 hours, up 57 for the 30-day. But it seems to have been breaking some of its user records going along. I believe it just touched an all-time high of just over 3 billion hashes going on. Trading volume's up 74%. Tweet volume is it's up 50% over the average. And it has a 57% pop on the 30-day. So HBAR has been a favorite in the past. It looks like it's gaining speed again now, but again, we don't know where this market's going to yield, whether we're in a bull run or a bull trap. We have Curve CRV up 4% for the 24 hours, but up 103% for the 30-day. Trading volume plus 171%. In the last 24 hours, and tweet volume up 94%. Daily sentiment sitting strong at 71 over 100. Axie Infinity, Hedera Hashgraph, Curve. Those are our standouts.
So, Alex, quickly, of those 3, which is the surest bet in your mind?
Well, there are no sure bets in life except for taxes and death. But right now, we do like Curve Finance CRV. It is strong. Axie has had its problems over the year. And HBAR, its user growth has been a little slow as of late. So,
awesome. John, Najarian, John, thanks for joining. As always, Looking for 3 great option picks from you. What do you got? And feel free to comment on Alex's genius and Marc's as well. And Alex, we're going to get into Genesis and its bankruptcy, as well as Chat GPT a little later. You guys are right on topic with everything. John, what you got?
Well, Rob, we've seen a lot of short-term, very short-term speculative trades. And the reason I say speculative is they're generally buying either out of the money calls or out of the money puts. And both of those we would say are speculative. They're not really looking to run right with the market. They're more or less a cheaper shot on the direction the market takes over the short term. That said, they made some great calls middle of last week, buying some upside calls in most of the indices, even though it looked like the market might be rolling over. So those same big traders reversed those trades on Friday, and for the next week or 2 weeks, they've been buying the IWM, which is the Russell 2000 index. They've been buying those rather aggressively, the out of the money puts. Once it ran up and broke through 184 to the upside, that particular ETF, the Russell, then they got out of their calls and they instead bought puts. So that would be the first one that I'd throw out there, Rob, is that IWM and SPY, both of them are indices that track either the S&P 500, that's the SPY, or the IWM. And both of them had very successful traders buying in the middle of last week, middle of the day, Wednesday, I would say, and then trading out of those and reversing that trade into a short position on Friday. So I thought those were both pretty interesting. And one of the more interesting trades that we've seen that's a little longer term than those SPY or IWM trades is the speculative trades that are out there in March for energy. And we all know that if it was a cold winter in Europe, that would be bad. If China reopened too quickly, it could also put more upward pressure on prices of energy. But now, after a couple tests of the mid 70s for crude oil, and I mean like $75 a barrel or so, now we're seeing people betting again, and it's pushed through 80. And they're betting that over the next 2 months, we're likely to see MRO and ExxonMobil and some of the big energy plays move to the upside. And those are trades that we've tracked and traded over the past couple weeks.
Just quick question, John, before we move on the energy stuff. How much does what's happening in Ukraine and the war affect that? I know for a while people were talking a lot about whether there'd be an energy shortage in Europe. Doesn't look like we're going to face that right now, right? So is that less of an issue? Is that already factored in?
I think it's European weather that's more of a function of demand out of Europe. So if we've had, and we have had for December and January, pretty warm temperatures across Europe, and many of their ski resorts have suffered. I was just over there, and now they're starting to get heavier snows, which probably indicates to all of us that it's getting a little colder over in Europe. And that, along with the reopening of China, Rob, could really push prices up in the energy space.
Okay, guys, let's pick up a couple of these topics. I'm going to start with the biggest, ugliest, most mundane one that everyone else is talking about. I like to say on this show, we're going to talk about things that everyone's talking about, bring something different to the table, or we're going to talk about something people should be talking about that they're not. Everyone's talking about the debt ceiling. And, you know, I come out of a politics background. I always look at this debt negotiation as more political than anything. Everybody we get to the edge and then always we fix it. And usually we fix it by raising the debt ceiling more. It's kind of been the way it is. You raise the debt ceiling, everybody screams and shouts, the government's going to collapse. So 2 questions here. One, is this just a bit of a game of chicken? And is the market kind of already prepared for it, knowing one way or another they'll figure it out? Or are we really at risk of a default, you know, as Janet Yellen would put it?
Yeah, Rob, the market doesn't care. The market knows that it's horseshit, that it's all political gamesmanship and political brinksmanship, we could just raise the debt ceiling, print more money, make the inflation picture worse. I really don't think the market gives it that. If you looked at sentiment data, which we look at with Battlefin, of course, being a leader in the alternative data space, and you track, as we do, the topics that are being talked about by traders, institutions, and retail, the debt ceiling falls pretty goddamn low. So I think it's another unfortunate embarrassment from the government and the state that the way it is these days.
Alex, you said something interesting to me before. You're like, is there a debt ceiling?
Yeah, I mean, I think Marc is spot on with this. Is there a debt ceiling? I think, first of all, we should stop using that term. There is no ceiling. We live in an open air space as far as I'm concerned with debt. And to Marc's point again, I mean, there's not much more to say to this. The market doesn't care, and we can print money, and we've proven it.
And in the end, we're not going to default. That's never happening, which would be bad if it did. But John, ultimately, to their point, right? Investors see around this. So we're just basically playing a political shade game that scares the heck out of average Americans, or maybe they don't even care.
Yeah, I would agree with the entire premise there. They don't really care. They figure, oh, well, if they shut it down, they might actually applaud, but it's unlikely to happen. And I think that's where we are right now, that we're not likely to see a Republican-controlled House decide that they're not going to fund the government. But I bet there'll be a lot of negotiations about how much more they're going to fund into the war effort in Ukraine versus shutting down the government. But I think that'll be a negotiation.
Here's a random quick question for you, John. Are there industry sectors that generally do better or worse to be playing in when you're around this issue of a debt ceiling thing going on, or currency things? Or is there a space where it's kind of like, this is a good area to play in right now?
Well, if we saw a softening in defense stocks at all, because obviously government is a huge spender in those areas, defense. If we saw a softening there, I would buy it with both hands, because again, we've got that ongoing conflict, the war in Ukraine, and they will likely get funded regardless. I mean, that would be the last thing that wouldn't get funded is the defense stocks. So if they softened up a little bit, I would love to jump in on those.
Buy the military industrial complex.
Yeah, and I'm not a big fan, but I am a big fan of making money. So I'm just saying, if we dropped, because people were afraid that, they're going to cut back on spending, especially for military with the Republicans in office, I would say hogwash. They're going to do the same thing Democrats did and fund the war in Ukraine regardless.
Okay, so everyone's in agreement on that. Debt ceiling, don't panic. But don't we need to start figuring out how to cut spending? I mean, Marc, that's a quick question for you. Does the market not ultimately kind of respond to the factors? It's just baked in, like it's almost irrelevant because it's pushing. We got inflation, threats of recession.
No, listen, I think the market does care. I think investors do care. I think we can't, continue with tax and spend policies that have proven to be inflationary, that have proven to be damaging to growth in business and growth in the U.S. economy and growth in employment. But, Rob, this is all against the backdrop of one of the worst inflationary environments that we've seen by some estimates in 50 years. And a Fed that has explicitly said that they want to hurt the inflation picture and see the economy cool. What does it mean when they talk about the economy cooling, right? They want to see earnings come down. They want to see more people in the unemployment line because that's the only thing that they think is going to actually get runaway inflation out of control. The best way to get runaway inflation out of control is to stop the helicopter money policies and stop the out of control tax and spend. But we're not going to see that anytime in the next 2 years.
And we're not going to see it. We're not going to see it, and investors have to operate around it. Let's talk about Genesis and the crypto banking industry. And Alex kind of ties into this. A lot of people said Bitcoin cryptos would be inflation proof and resistant to these things. And we're seeing they're not, but they kind of have their own set of problems, right? And Genesis, being the latest exchange to declare bankruptcy, really does highlight a short-term and a long-term problem, right?
Absolutely, Rob. And let me tell you something. The amount of money that's involved in this bankruptcy filing is around 3.6, had to be as high as 5.1, but I believe that's been toned down. The biggest problem that I'm seeing with this is the Gemini correlation. I'm going to honestly come out and say I feel that there is a possibility of a bankruptcy, a collapse with Gemini. And I'll tell you what, I'd love to dig deeper into that and go into the weeds. But as this stands right now, I need to learn more about some of the happenings going on. We'll learn more on Monday and Tuesday. But the thing is that this Genesis bankruptcy filing is far more contagion than what I think people are thinking right now, the average retail investor.
What does that mean for you as an average retail investor? What should you be looking out for? What should you do or not do to protect on that?
Well, right now it depends on your trading strategy, your investment strategy as a whole. I think the long games are not, not particularly caring about it because their time horizon is 5-10 years. But I think for the swing traders, the scalp traders, the short-term guys, for them, their care is to maintain volume in the volatility so that they can eke out profits. As far as it's the industry infrastructure that really is at peril. And I think we're going through that great reset that everybody has spoken about. But from the investor point of view, I don't think for the longs it's going to matter. But I think from more of a regulatory infrastructure play, the counterparty collapse is going to be something that's going to change the landscape. I also want to just briefly put in the banking crisis in crypto that is happening now, that is going not so well spoken about, but it's going to play a big role in this reset alongside this Genesis and potential Gemini debacle.
So, Mark and John, when we look at this, right, everybody talked about like all these collapses and stuff are good for the ecosystem. At the end, you kind of get the FOMO out of it, get rich quick out of it, and the industry will reset. It'll be smarter, better. The cream will rise to the top. That said, we are looking at a lot of things falling through. And when Alex says, we're looking at a crypto banking crisis, that's a big deal for the whole market space.
Yeah, Rob, there's no doubt. And I think, when we talked about things like this being, quote unquote, good and the cream rising to the top and all of that, I don't know that we were talking about these exchanges that were considered to be among the gold standard and some of the most trusted names. When I made those references, I was referring more to some of these flighty projects and some of the NFT, pure just based on FOMO and things of that nature. I think we do, when we have the failure of highly trusted exchanges that were centralized, by the way, and therein lies really the heart of the problem, is people talk about investing in decentralized technologies on centralized exchanges and then wonder why there's contagion. I think we will see some very negative industry fallout as a consequence of the failure of exchanges like the ones that we're talking about here. So I think that's an important distinction to make. And I think, I totally agree with Alex. I think there is a much stronger possibility of a Gemini bankruptcy because we are starting to see, and I know this is a radio show, so we can't show graphics, but there was a fantastic graphic representation by I forget which blogger that showed all of the interconnectivity of the various exchanges and funds and the lending back and forth of the same cryptos. And when you look at something like that, it's not hard to understand how we could be looking at further collapses of exchanges like the ones we're talking about.
And Rob, I do want to add to Mark's point, and this also touches the traditional finance space. And I don't think a lot of people are aware that Silvergate, which was primarily FTX and Alameda's bank, which has just gone through a $7+ billion bank run over the last couple of months, hitting it really hard where it counts. They took an emergency bailout loan, and that bailout loan came from the Federal Home Loan Bank. So that's a traditional way to ease a banking crisis. And I'm not sure people are aware of that. I mean, they basically took a TradFi loan, interbank loan, and to bail themselves out of a crypto, banking run. So pretty serious stuff.
But I mean, but the only reason they were even able to do that, Alex, is because they held it. They were one of the very few that held the traditional FDIC banking license. Otherwise, they would not be remotely eligible for that federal bailout. Nobody's coming to bail out Gemini, just as nobody was coming to bail out FTX.
I totally agree, Mark, and I think the fact, wasn't about whether it's an exchange or not coming from me, but I think the fact that it's coming from it's a TradFi bailout on a crypto fraud mistake. I think that's going to get a lot of people riled up.
John, let me bring you into this, because you've said before you don't think we need any more regulation in the space, and yet I think what we're seeing is, and maybe there was sufficient regulation on FTX, but I think we're going to see more regulation. So, John, quick thoughts on that.
It is a big deal. It has hurt sentiment. Like that being so negative has hurt crypto, and yet look at where crypto is. We've seen a 28 or 30% move out of the biggest cryptos in the last 30 days. So as bad as it is, it seems like the market has already priced in some of the worst for Genesis and some of these others, and it's likely that the survivors will indeed thrive. I do think we'll see more regulation, but that's going to be for U.S. domestic, and they don't have a lot that they can do about non-domestic. So the international stuff, I don't know how they do much with that, Rob. I think that internationally, people that access via VPNs and so forth, they're not going to really be worried too much about what goes on with the U.S. domestic policy.
Okay, Mark, let me just run this back to you, and then we're going to switch to ChatGPT. But both of you, all three of you, does Bitcoin itself, maybe Bitcoin and Ethereum, do they kind of weather this in a different way than everything else? Is it sort of like, is Bitcoin going to take a hit on this? I mean, we're seeing the rise in the last few weeks, and that'll still be volatile. But are we looking at a situation where they probably, no matter what happens in the banking side of crypto, will keep weathering it in a strong way, or is their value at risk too to dip again?
Well, look, I'm going to actually defer to my colleague, Mr. Mascioli, on that one. I've been very pleasantly surprised by what has been an absolute bull run, and hopefully not a bull trap, particularly in Bitcoin and crypto. Just over the past few days here, it's really been nothing short of remarkable, with Bitcoin trading at around 22.5 as we're taping here, Ethereum at around 1600, 1623 almost. Really had Bitcoin having hit 23 plus in the wake, while the dust is still yet to clear on things like FTX, in the wake of the Winklevi being the target of this SEC investigation. The resiliency is remarkable. I'm pleased. Yeah. I say that because I'm happy to see it. Will it remain resilient? I tend to think it will, Bitcoin and Ethereum. Alex, what do you think?
Yeah, no, I agree. It's very uncertain times for people who are trying to predict the market right now. And Mark's correct. My conviction right now is pretty unsettled. I really want to see what the last of what Mr. LoPresti said with regards to Gemini and the SEC investigation and stuff, how that plays out, because I think that's going to be a talking point to the market price. Mm-hmm. We saw Genesis was baked in, the bankruptcy was baked into the price. Maybe this is too. I don't know. I wish everybody to make money always.
Bull run or bull trap? All right, you're still on the fence on that one. That's a good note, though. People should think about that. Like, again, don't get the FOMO, jump on the bandwagon. Bitcoin's going up. I'm going to pour a lot in. If you're not comfortable that may take a big dip again, you should be sitting on the sidelines or being thoughtful, because this is, again, where everybody does this dive in, and then they're like, well, I thought it was going to be, a gold rush. Let's talk about ChatGPT. So everybody's talking about ChatGPT. They're doing some interesting pricing things, and I think one of you guys, was it you, Alex, who brought it up, or Mark? One of you guys brought it up that what they're doing with their newest plan.
They're looking to monetize their plan, and as very, very well they should, right? Everybody's using it. They're getting a gazillion inquiries per hour. They have 1 million users. It's costing single-digit cents every time somebody inquires. That means their burn rate is let's call it a million plus a day now that they're burning. So I think I think their test, if they were using this all for test subjects, it worked, and now it's time to charge.
Yeah, I mean, it was me that brought it up, Robin, and what they announced was a $42 a month plan,
Right,
right?
right.
And that's not even the highest level plan. And that means 2 million monthly users, 2 million MAUs, monthly active users, to reach a billion in revenue. Some analysts are saying that could easily happen this year. I actually think it could easily happen sooner than the end of this year. I think they could possibly double those numbers based on an unbelievable flurry of users to this technology.
So based on that, Mark, somewhat prediction on your part, what's the smart market move? And is that obviously part of that's tied to Microsoft? But
it is. It's part of the bull case for Microsoft, which we've talked about twice, in our previous show as well as this show. So I don't want to beleaguer that point. But Microsoft's investment in ChatGPT, will there be competitors? Yeah, there's no doubt there'll be competitors. Amazon, Google, they're all looking at getting into the technology. But Microsoft clearly has a massive running head start in this incredibly transformative space of generative AI.
John, let me ask you what you think the smart play here is for you. Obviously, you're not going to disagree with Mark on this, but just your added thoughts on it.
ChatGPT definitely adds value at Microsoft, and it will allow, assuming that they can do a significant deal with them, it would allow them to leverage up what they've already done with LinkedIn, and what Microsoft has built out. I think is going to be it's going to be a very deep moat, a wide moat and a deep moat that anybody else in the space won't be able to compete in those specific areas that Microsoft will then dominate.
Okay, John. So your money where your mouth is. Obviously, Mark is doubling down on Tesla, and Alex is going with Ethereum. One of those, or pick your own?
I would go with energy this week. Broadly, I would go with energy, whether it's USO or UNG. I think those are broad market picks in energy that I like.
You got one particular? Got to pick one.
I'd say nat gas then, UNG.
UNG. Okay, the picks are in. And again, we're going to keep track. We're going to see who's winning, who's losing.
All right. Thank you.
So big question for you guys. When we look at, Alex said to me earlier, you got to look at how companies are they going to effectively monetize? And Alex, I would say with ChatGPT, you're wondering, can they pull this off? Like, it's time to monetize, but are they doing it the right way? And I know that's a question that's different for every company, but are there just like a couple pointers? Like, if you're out there looking at companies to invest in, are there a couple big ticket things that you go, if they're not doing this or they are doing this, it's a good or a bad sign?
I think this is a great sign. I think, for them to monetize and move forward as a revenue generating business is what every business wants to do. I mean, they've had A-list investors up until this point. They've waited long enough. They've released it to the world. They've blown our minds. Microsoft has stepped in with a large investment to catapult it forward. God bless them all. I think they're doing exactly what the playbook describes. So as far as, is it solving world problems or putting every white collar person out of a job? I don't think so. I think there's still a lot of, little flaws in Chat AI and Open AI, but I think they'll eventually work it out. The end is not near.
It's Bulls, Bears, and Blockchain on Revolution Radio. If you want to follow us at Get Rev Radio, or check us out at revolutionradio.io. Great show, guys. We're about to move on to our Put Your Money Where Your Mouth Is segment. But just a last note on this. I mean, again, I think we're seeing in the world of markets and crypto and TradFi meeting DeFi and the whole way these AI type technologies and Web3 are going to transition us. And one side of that, and we'll have more conversations about this, one side of that is, the world as we know it and workers as we know it are all going to be displaced. That's never what happens, right? Every time something transformational happens, it displaces and then replaces, right? I mean, in fact, somehow it seems we always seem to find a reset. We raise the panic flag and then we find a way that it integrates in. I stick by my view. We will make it through this. And these new technologies are going to transform us. And there's going to be some awesome companies and things and technologies that emerge that you're going to want to get in on. And we're going to be looking at them kind of early birds view here on Bulls, Bears, and Blockchain. You should be tuning in because we're going to get the insights and bring companies on to talk about this stuff, that are doing it. And you guys will grill them and we'll see how real they are. So I'm looking forward to our first guest in that coming up soon. So ready to put your money where your mouth is, guys. And you know what? We're going to keep it, by the way, we're going to keep a tally of this. I think we're going to raise the amount too. We're going to keep a tally of this and everybody's going to, see how they did. So, it'll be like, we'll keep score, who did well over the week. And, just like fantasy football, we'll see whose picks are the best. And you can make your pick and you can change your pick. I mean, you can change after someone else makes their pick. So, Mark, I like to let you pick first.
Yeah, so my two picks, one was a bull pick on Tesla. Obviously, the stock went up even further since we had the last show, up to 133 at the close on Friday. And my bearish call on the bank stocks also panned out to be the right move. So I'd probably put another $100 on Tesla because I think this thing goes. And by the way, all the technicals on it, we ran a technical analysis, whether it's a cup and handle or any of the various things that all the technical guys love to look at, and John can comment on that. That every single technical indicator in this stock indicates a further bull run. So I'd put another 100 on Tesla, especially if it gets beat up on earnings this week and is cheap again.
Doubling down. Next show, you're going to have to pick a different one, man. Only 2 in a row on the same one. Alex.
And I went into Microsoft last week. I love his dedication to Tesla. I think a lot of what Mark is saying is true and will come to fruition. Right now, if it comes to the crypto markets, I'm having trouble with a top 50 selection for everybody because it's like the good old bull run days. You could throw a dart at a board and you're going to be right. So I'm going to let the easy picks go away. There's a lot of coins raging right now with not good fundamentals. So I just know that there's gamblers out there. But what I will say is I've stopped buying Bitcoin for the time being as sentiment has turned bearish. As well as all of us speaking about the concerns in the market that need to get flushed out that are forthcoming. But I am going in Ethereum. So I like Ethereum. It's down just under 2% for the day. It's up 33 for the month. It has strong bullish sentiment going in, and the Ethereum game has not changed.
I want everyone to hear this. You stopped your BTC. You're holding. You're not pouring more in.
I'm not accumulating as of right now. No,
Okay.
I stopped right when we hit around the 22 mark.
Mark, John, are you guys in the same boat with that on BTC, on Bitcoin?
Yeah, I'm actually I am. I'm not adding to the Bitcoin position. I think we might be in a little bit of a bull trap here with Bitcoin. If I had to add, and I'm not adding to crypto positions because I've been holding for a while now, even since the beginning of the crypto winter in February or March of last year. So I'm still holding and looking forward to getting some of those, recouping some of those losses. But if I was forced to increase an allocation to crypto right now, I would have to agree that it would be Ethereum.
John, I want to get you on that Bitcoin question.
I'm not so worried about what's going to happen short term with these cryptos, but I do think the fact that you've pulled so much crypto off the exchanges and onto hardware wallets, software wallets, not on chain, it's not out there and people able to grab it. That's another reason that we've seen crypto doing very well, is that there's just not the supply that there was before.
Okay, John. So your money where your mouth is. Obviously, Mark is doubling down on Tesla, and Alex is going with Ethereum. One of those, or pick your own?
I would go with energy this week. Broadly, I would go with energy, whether it's USO or UNG. I think those are broad market picks in energy that I like.
You got one particular?
I'd say nat gas then, UNG.
UNG. Okay, the picks are in. And again, we're going to keep track. We're going to see who's winning, who's losing. All right, guys, the picks are in. We're calculating it, but it looks like right now Mark is in the lead. This is going to be a competition, guys, so pick wisely.
I want to see the proof of this.
That's why you can only double down 2 weeks in a row. Great show, you guys. Great content. It's Bulls, Bears, and Blockchain. Again, top minds in the market space, TradFi, to DeFi, looking into the world of Web3 as the technologies of blockchain emerge and transform all of our worlds. And, insights you're not getting anywhere else. Done fast and furious so you can get back to your day, morning, night activities. Alex, Mark, John, as always, a blast to do this with you guys. Hope your picks go great. Thank you, guys. Can't wait to see you next time on Bulls, Bears, and Blockchain on Revolution Radio.
Thanks for joining Rob Nelson, Alex Mascioli, Marc LoPresti, and John Najarian with another great episode of Bulls, Bears, and Blockchain, twice a week on Revolution Radio. Whether you're new to the world of Web3 finance or an experienced investor, we've got you covered. Follow us on Twitter at GetRevRadio and visit our website at revolutionradio.io, helping you make smarter financial decisions.